What if I told you that the very money you use every day, the currency that shapes your life, is a lie? What if the entire financial system we've been told to trust for decades was engineered by a select group of elites to steal your wealth and lock you into a perpetual cycle of debt and uncertainty? It may sound like conspiracy talk, but the truth is, they warned us back in 1971. That's the year the US government took us off the gold standard, and everything you think you know about money began to unravel. The dollar, as we know it today, is nothing more than a fiat illusion, a currency based solely on trust. And trust, well, that's exactly what the elites have been manipulating ever since. Sound familiar? Inflation eating away at your savings? Shrinking wages while the stock market skyrockets? Real wages in America are at an all-time low, but the billionaires those same families who've controlled wealth for centuries are getting richer. The system is rigged. And today, we're seeing the terrifying consequences of a financial system built on borrowed time. Where are you watching from right now? Drop a comment below. And if you're new here, hit subscribe for the unfiltered truth about how they've been pulling the strings and why the next financial crash is not just a possibility, it's inevitable. Stay with me, because this story starts in 1971, but the stakes are higher than ever before. In 1971, the United States took a monumental step that would change the course of global finance forever. President Richard Nixon made the fateful decision to suspend the gold standard, meaning the US dollar would no longer be backed by a physical asset like gold. For decades, dollars had been exchanged for gold on demand, providing a hard limit on how much money could be printed. But that all changed when Nixon announced, "We are all Keynesians now." The dollar was now backed by nothing but faith. Sound familiar? Fast forward to today, and we live in a world where central banks routinely print money out of thin air, pushing interest rates to artificial levels and flooding the market with liquidity. Yet the cost of living keeps rising. Wages stay stagnant and the wealth gap expands at an unprecedented pace. Our economy has become dependent on massive debt and central bank policies that, ultimately, serve the interests of the financial elites, not the average person. When Nixon severed the tie between the dollar and gold, he set in motion a chain of events that led to the rise of fiat currencies. Currencies that have no intrinsic value and exist only because governments declare them to be worth something. For a while, it seemed to work. The US economy surged and the stock market boomed. But beneath the surface, cracks began to show. The warning signs were all there, but they were ignored or perhaps deliberately overlooked. By the mid-2000s, the financial system was far from stable. In fact, it was teetering on the edge of collapse. Sound familiar? The 2008 financial crisis was the result of risky financial products like mortgage-backed securities, which had been given inflated ratings by credit agencies. These financial products were sold as safe, even though they were anything but. Once the housing bubble burst, millions of people lost their homes, and the entire global economy nearly came crashing down. But here's where the conspiracy starts to unfold. While the average citizen lost their savings, homes, and jobs, the billionaire elites, the same families who controlled the system for generations, came out on top. They had engineered the system in such a way that when the crash happened, they were the ones who profited. One of the key mechanisms that allowed this to happen was the shadow banking system, a hidden sector of the financial world, where trillions of dollars are traded outside the regulation of central banks or government oversight. These off-the-books transactions allowed Wall Street to take massive risks without ever truly being held accountable. You might be thinking, how did they get away with it? Well, that's the core of the problem. When the global financial system is based on nothing more than paper promises, and when the key players know how to manipulate it, the consequences can be devastating for ordinary people. It is not a matter of if the system will collapse again, it is a matter of when. So, what happened after 1971? The dollar became the world's reserve currency, the de facto global standard, and banks, governments, and corporations stacked up unimaginable debt, all backed by the US dollar, which now had no gold backing it whatsoever. In fact, the global debt has now reached over $300 trillion, a number that continues to climb each year. But the secret truth is that, at the core of this financial system, there's an unspoken agreement. The dollar is a fiction. It only exists because the world has agreed to believe in it, and that belief is starting to crumble. So, what did the elites know that we didn't? How did they manage to not only survive the collapse, but actually thrive during and after it? It all comes down to a hidden financial instrument known as derivatives. These financial contracts, which are essentially bets on future events, were introduced to manage risk. But what started as a way to spread and manage risk quickly turned into a parasitic financial tool used by the wealthy to amplify their returns and their power without ever risking their own money. But here's the real kicker. The derivatives market is massive, worth over $500 trillion globally, more than 7 times the global GDP. These products allow the banks and financial institutions to make money off of risk without being exposed to the same risks that individuals faced. It was the ultimate way to engineer wealth out of thin air, while keeping the average person exposed to catastrophic losses. Derivatives became the perfect storm for the financial elite, creating an artificial layer of wealth that was backed by nothing but debt and speculation. As long as people believed the market was safe, they would keep investing, while the banks and financial institutions used their influence to keep things running smoothly. But the story gets even darker than this, because while the global financial system was becoming more reliant on these complex, opaque financial instruments, there was one critical moment that would expose the full scale of this fraud. And that moment came during the 2008 financial crisis. You won't believe the name of the institution at the center of this web of deception, or the shocking revelations about how they manipulated the entire system. The receipt is wilder than you think. So, let's break it down. To understand how we arrived at this place where the financial system is based on nothing but trust and illusion, we need to dive deeper into the mechanics of the system and reveal exactly how the financial elites were able to manipulate it to their advantage. At the heart of this story is fiat money, money that is not backed by any tangible asset. When the US left the gold standard in 1971, the dollar's only value came from the faith that people and nations placed in it. Sound familiar? Today, central banks can print as much money as they want, and as long as the global markets trust the dollar, this printed money remains valuable. But what happens when that trust begins to erode? Well, we're already starting to see the cracks. Let's look at debt. The world has never been in more debt than it is today. The total global debt has surpassed $300 trillion and continues to grow every year. But this debt isn't just an abstract number, it's a ticking time bomb. And the elites, who have close ties with governments and central banks, have used this debt to create a global financial pyramid that they control. How the elites control the system. They use the derivatives market and the shadow banking systems. The derivatives market, which hit a peak value of over $500 trillion at one point, is one of the primary ways the financial elites have kept this illusion alive. To understand this, imagine a bet placed on a horse race. You're not betting on the horse itself, but on the odds of the horse winning. The derivative is essentially a bet on the value of an underlying asset, like stocks, bonds, or real estate. But here's the problem. These derivatives don't exist in reality. They're purely speculative, and their value is based entirely on the expectations of what will happen next. What made derivatives so dangerous was that they allowed banks to gamble with other people's money, without assuming any of the risk themselves. These financial products were sold as safe investments, even though the entire market was underpinned by nothing but speculation. The derivatives market was essentially the engine behind the 2008 financial crisis. Banks like Lehman Brothers, which were exposed to these risky financial products, went bankrupt. But that's not all. The shadow banking system, an underground financial network of hedge funds, private equity firms, and unregulated financial institutions, allowed the elite financial players to hide their risky activities away from regulatory scrutiny. These shadow banks could offer high returns on investments by using complex financial products, but they did so without the same regulations that regular commercial banks had to follow. In simple terms, the shadow banking system allowed the elite few to engage in massive speculation and create money out of thin air, all while being largely unaccountable to the public. And because they weren't directly tied to traditional banks, they could take on far greater risks with no oversight. The greed and the illusion is the reason how the system collapsed. As long as the system worked, the elites had no incentive to stop. Banks and hedge funds made billions off of derivatives and other speculative products, while ordinary people were told to trust that the system was sound. The global economy, driven by easy credit and cheap money, boomed for a time. But this growth was built on an illusion. The housing market was just one example. Before the 2008 crisis, mortgage-backed securities were being sold to investors around the world as safe, reliable assets. But the reality was far more disturbing. These securities were backed by subprime mortgages, home loans, given to people who couldn't afford them. Once the housing market started to fall apart, These mortgage-backed securities became toxic, and their collapse triggered the 2008 financial meltdown. But here's the most outrageous part. The banks and hedge funds that created these toxic assets, even though they knew they were worthless, bet against them using derivatives. In other words, they sold risky products to the public and then profited when those products failed. Sound familiar? It's happening again. Today, we see the same pattern emerging in markets like cryptocurrency, real estate, and tech stocks. There's a bubble forming in several sectors of the economy, and while the average person is left holding the bag, the financial elites are cashing out at the top. But here's the most shocking part of this entire scheme. The Federal Reserve, the central bank that controls U.S. monetary policy, bailouts, and quantitative easing, is at the center of it all. In fact, it has been printing trillions of dollars to bail out the same banks and corporations that caused the 2008 crisis. This endless cycle of debt and money printing is essentially a time bomb waiting to go off. Let's take a deeper dive into how this entire game is structured. If the 2008 crisis was about subprime mortgages, the next crisis could be rooted in something far more insidious: the global debt bubble, which has already surpassed $300 trillion. And no, that isn't a typo. $300 trillion in global debt. The 2008 crisis was a warning shot, but we were too distracted to listen. Today, global debt has exploded even further, and the way governments and central banks have responded has only made the problem worse. How did we get here? Let's start with the Federal Reserve, which was created in 1913. This central bank, along with other central banks around the world, has been the engine of this debt spiral. After the U.S. left the gold standard in 1971, the Federal Reserve could now print unlimited amounts of money to fund U.S. debt without any restrictions. But here's the catch. When they print money, they dilute the value of every dollar that already exists. This makes everything more expensive over time inflation. If inflation gets out of control, people begin to lose trust in the currency. If the dollar crashes, the global economic system could collapse. Sound familiar? The financial elites have known about this for decades, which is why they're continuously printing money. But there's a hidden danger here. As they inflate the economy with easy money, it creates a false sense of prosperity. It's all an illusion until it isn't. The debt machine is endless borrowing and false prosperity. The real engine driving the debt cycle is the debt-based monetary system. What's that, you ask? Simple. Most money in the world isn't physical currency. It's just debt. It's created when banks lend money to borrowers, whether that's you, your neighbor, a company, or even governments. When banks lend out money, they're creating it out of thin air. This is why the term money is a bit of a misnomer in today's economy. The money you use to buy goods and services is backed by nothing but a promise to repay. And who exactly is doing the borrowing? That's where it gets even more alarming. Let's break this down. Corporations are borrowing massive amounts of money, but they're not using it for growth or innovation. They're using the debt to buy back their own stock. By doing this, companies artificially inflate their stock price, making it seem like they're growing when, in reality, they're just leveraging debt to look good to investors. And who's enabling this? The Federal Reserve. Since the 2008 financial crisis, the Fed has been quantitatively easing, essentially printing money and flooding the system with it. This has kept the stock market artificially inflated. Companies can keep borrowing, and they can keep buying back stock, making it look like the economy is doing well, when in reality, we are drowning in debt. But here's the kicker. Every time these debts fail to be repaid, the elites just bail themselves out. Too big to fail? Absolutely. The system has been rigged so that when the crash comes, it's not the rich who suffer. It's the average taxpayer. This is parasitic finance at its finest, lending without any risk, all while draining wealth from the public. The power of derivatives is the financial weapons of mass destruction. The most mind-boggling part of all this is the derivatives market. We were talking about a financial instrument so complex and so huge that it is literally impossible for the average person to fully comprehend. At one point, the total value of the global derivatives market was estimated to be over $500 trillion, 10 times the size of the entire world's GDP. To give you some context, that's more than 7 times the entire U.S. economy. Derivatives are essentially contracts based on the future price movements of underlying assets like stocks, bonds, real estate, or commodities. For example, imagine betting on the price of oil next year. If you win, you collect the money. If you lose, you pay out. On the surface, Derivatives may seem like harmless bets, but here's the problem. These bets are often taken with other people's money, and they have massive ripple effects across the entire economy. During the 2008 financial crisis, it was the derivatives market that truly unraveled the financial system. Banks have been insuring mortgage-backed securities, high-risk financial products that were based on subprime loans using derivatives. But when the housing market collapsed and these derivatives turned into toxic assets, the entire global financial system teetered on the edge of collapse. But here's the catch. The derivatives market is still alive and well today. Even after the financial crisis, nothing has fundamentally changed. We're still playing with fire. The derivatives market remains completely unregulated in many ways, and it's once again being used to bet on financial products that are too risky. The financial elites use derivatives to hide the true risk of their investments. They bet on the collapse of markets, get paid when things go wrong, and make even more money when the taxpayer foots the bill. Sound familiar? The system hasn't changed. It's just become more complex and more dangerous. Shadow banking is the hidden hand that moves the markets, but there's more. The financial system we see in the mainstream media is only the tip of the iceberg. Beneath the surface is a shadow banking system that is largely unregulated and completely opaque. This is where the true financial manipulations happen. Shadow banks are institutions like hedge funds, private equity firms, and money market funds that operate outside the traditional banking system. They provide financial services that mimic traditional banks, like loans and deposits, but without the same oversight or regulation. Because of this, shadow banks can take enormous risks without the same scrutiny or protections that regular banks face. In the aftermath of the 2008 crash, shadow banking grew at an explosive rate. These unregulated entities began to trade derivatives and complex financial products that were designed to evade regulation. When the system failed in 2008, it wasn't just the big banks that were exposed, it was this unregulated underworld of shadow finance. And the scariest part? It's still happening. In fact, many of the same players who were at the center of the 2008 crisis are still involved in shadow banking today. They've just found new ways to hide their actions behind complex financial structures. If you've been paying attention to how the world operates, you know we're on the edge. But what if I told you that the biggest lie of all is still being fed to you daily? The system is rigged, and the people in charge know it. They know that the financial crisis of 2008 was only a taste of what's coming. And today, we're living in the aftermath of decades of reckless decisions, with global debt now over $300 trillion. These debts aren't just numbers, they represent a ticking time bomb that will explode. The question is, when? And when it does, who will be left holding the bag? We've already seen the same game play out with the derivatives market, where $500 trillion worth of bets are being placed on the economy while the same shadow banking system operates under the radar, manipulating assets that control your wealth. Is this the future we want? Or will we sit back and let them make us pay for their greed and short-term profits? And here's where it gets even darker. The global economic system today is faster, more connected, and more volatile than ever before. The next crash won't be something we can just recover from in a few years. This time, the crash will be global, and it will be catastrophic. It won't just be the collapse of some institutions, it will be the collapse of trust in everything. The dollar, governments, even the financial system itself. The truth is this, the elites are playing a game with borrowed time, and we're all just pieces on their chessboard. When it falls apart, it will not be the rich who suffer the most. They've already insulated themselves. It will be you, the average person, who loses everything. And the scariest part? You're not even aware of how deep the rabbit hole goes. So, let me ask you, are we wiser now, or are we just walking the same path, blindfolded, with shiny new suits on? The system may be dressed up, but it's a house of cards. And when it falls, it will bring everything down with it. But here is the good news. We don't have to sit back and let this happen. We have the power to see the truth, to wake up to what's really going on behind the curtain. You don't have to be a passive victim of a system designed to fail you. If you want to be part of the solution, if you want to understand the truth before it's too late, subscribe to get more of these eye-opening insights. Share this video with someone who needs to see it, because once enough people wake up, the game changes. So, I'll leave you with one question. Are you ready to face the truth, or will you continue to live in denial?